Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I wanted to bring you a trade idea here in the SPY. This came up for me into the afternoon in the trading chat room. There was a trader that had asked John, he's like, hey, do you still do that trade that you open up on Thursday afternoon and then look to cover on Tuesdays? It's just an interesting window of time where, you're not going to see always great decay over the weekends, but if you can get, theta to work in your favor a little bit, if you can put these strategies on at the right moment in time, I think they are very viable. Now, I want to head into next week with a little bit of a neutral to bearish stance. I just think for the market to have a week of trading sideways, maybe come in a little bit weak, maybe catch some type of a tweet or what have you, that sees us come back in, I think is the theme of those next 5 days. Now, if instead it is just straight up and everything remains very bullish, right now we have a call wall at 600, and that should provide an area of resistance. So what I'm going to show you doesn't line up perfectly with this, but it does use it in mind where you can come up into that vicinity and do okay, make money sideways to lower, and the only way that this really gets hurt is if the markets are just straight up next week. So what the strategy is, stepping over here into the analysis or into the chain, and first finding the date, right? And I know that he spoke about doing this from Thursday into the Tuesday expiration. I think it's absolutely still in play tomorrow, especially if we open up. Given the nature of this tariff tweet-driven environment, it's hard to say what gaps are going to look like. But if we had some type of a 20, 30-point gap open in the S&P, this spread is going to trade at better prices. But the way that I usually start looking at it is by coming in and finding usually what's trading around $1. Because if I can do the body for $1, I can usually do a 3-wide unbalanced fly for a pretty decent credit. So let's just take this and try it at 598, where I'm going to buy a deep and wide 1 month 3-strike unbalanced butterfly. And if you've never done those, using the context menu of Thinkorswim is very helpful to make sure that it all gets positioned correctly. Because if you can follow just those couple of clicks, well, now you've got the spread exactly configured as I'm going to speak to. Now, of course, with the markets being closed, 19 cents is just a kind of a guess at the mid price. But this is where I'm saying if you come in tomorrow, and let's say you could execute this spread for, let's just say 50 cents, because that makes the math very easy, I think you have a very favorable position heading into next week. If you'd like to get a visual of what this looks like, you can just right-click it, move this over into the Analyze tab, and now you have a nice visual, right? So this just shows the idea that yes, if at expiration we do rally all the way up into, and let's say we close next Friday at 600, well then that spread will lose money right there. But if we move up into the upper range of resistance, remember I quoted that to you at 600, but the peak of profit here would be at 598. So if it took 2 or 3 days to get up into here, you would still be making money. And then, of course, if the market does have more of the downside, S&P can go to 0 and you still make money. So it's just a very versatile strategy. This is very similar to what we did in NVIDIA for our earnings trade. Now, we did it on the put side, and we'll cover that more in tonight's member video. But I wanted to give this to you as a fresh idea. Again, we gap up on Friday. I'm going to be looking to take in some credits on these. For the initiation, I like to look at them and say, do one at 50 cents. Then if we keep on rallying, do one at 65. And then maybe have your final tranche at an 80-cent credit. And then I want to carry that into Monday. If all of that is in my face on Monday and Tuesday, I will look at managing it. But for the most part, I put these on, acknowledging the risk of the spread, and then I'm either going to take them off at expiration, or I'm going to take them off before that for a profit. I'm not so much thinking about where a stop is, because option spreads have built-in risk. So know what that maximum risk is, let the probabilities play themselves out, and I think that'll be a good strategy for next week. So I appreciate your time and attention. I hope you get something out of these trade ideas. Also looking forward to tonight. John has a webinar that's going to be 4 hours after the cash close. So whatever time zone you're in, you should be able to find it. And I hope to see you there. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.